It's Monday, December 15th, 2025, and time for your Monday Market Update. I'm Miranda Alt.
And I'm Andrew Smart.
Thanks so much for watching. We have only 10 days until Christmas, so let's take a quick look at our Montgomery County numbers and see what's going on. We had 84 new listings, 75 under contract, 74 closed sales, 20 price changes, 3 expireds, and 19 currently on the private network. So some of the new builds, so it sounds like 84 still sounds like a fairly decent number, although we were looking at my report from 2 years ago?
2023, yeah.
2023. And we had 120
I believe
listings?
It was around there. Yeah, it was a lot.
It was a lot more than we're seeing right now. But we're still seeing a decent number of newly listed. However, about 27 of those newly listed homes were canceled and relisted. So they're actually homes that have been on the market for a while, but they have canceled the new listings, made it new to make it pop up on people's feed again.
Yeah.
It's a common strategy.
It's about a third.
It's about a third. Yeah, that's about a third of all of the new homes listed are actually not new. So if you're a buyer in this market and you're feeling like, well, boy, Miranda says there's 84 new listings, there's not really. It's a little bit less. And some of those are new builds, so there is some sort of explanation that needs to happen with 84 new homes or new listings. But there are 75 under contract, so there are buyers out there, and some of those buyers are really desperate. Mm-hmm. We saw two or three showings on our private listing.
Yep.
One of them, they have their home sold and they're going to be homeless if they don't find a home by January. And 2 of the other ones are job transfers. Now, Andrew, you put a home under contract yesterday.
We did.
Tell us a little bit about that.
So, funny enough, same story, kind of following the lines of what you just said, is that listing was actually previously listed about twice now on the private network. And it did end up coming to the public network. We ended up getting that one under contract pretty quickly, ended up shutting it down. But I think we're still kind of following those same lines of, it's still a little bit of tight inventory right now. I think according to the last couple of years here, according to Housing Wire, inventory growth has dropped from 33% to 13.5%, which is a lot. That is a lot, especially as we head into 2026 here, which is great, obviously, for our sellers,
Right, but we do still have some buyers that are wanting to participate. So your buyer on that one was an investor, investor we've worked with a lot. And he saw an opportunity there with a home that had been on the market for a little while, had done some price reductions, and he was able to get that under contract, which is great. And especially as the year is coming to a close, he'll be able to have yet another write-off before the end of the year. Mm-hmm. So there are different reasons why different buyers are participating in this market. Another factor that we're seeing right here is 20 price changes. That's not a lot. What we see some sellers doing right now is they're saying, we're just going to hold, we're just going to stay until the new year.
Oh my goodness, I feel like we see that non-stop. I mean,
everyone's like, we're just gonna wait because we know that after the new year, all these buyers are gonna hit the market, and then we're gonna get the price that we want.
Yeah.
So we'll see how that works out for them. Sometimes it works, sometimes it doesn't. We did have a rate cut last week, so the Federal Reserve did cut it 25 basis points. However,
rates really haven't moved. I think it went from 6.19 to 6.22. So I mean, they've really just been staying around that 6.25 mark, 6 1/5 mark for months and months now, weeks and weeks.
Well, and we went and did a kind of a deep dive on what the mortgage history has been, and the reason people feel like it's so high, even at 6%, is because from 2010 to about 2022, we had rates below 5%. Now, it's funny, the video that we watched yesterday from 2 years ago, I was like, okay, guys, rates are 5%, but it's gonna be okay.
Yeah.
And it's just hilarious because, it brings up kind of a common point that we've talked about before, which is that so many people wait because they think, but it's going to get better.
Yeah.
And sometimes you miss out on a great opportunity that's sitting right in front of you.
Exactly.
Another thing that we were reading about this morning from MBS Highway, which is one of my favorite sources, that's Mortgage-Backed Securities Highway, run by Barry Habib, who is an economist who has won the Crystal Ball Award from Zillow several years. And one of the things that he was reporting on this week was Cotality, which is a data company, released their Q3 home equity report showing that on average, homeowners have $300,000 in equity. So that's a good thing. That's great. And a large portion of that equity is going to be tappable. And so if rates come down even a little, consumers may be more inclined to use that equity for either a new home purchase or maybe some remodeling or things like that. Mm-hmm. But another piece of that report was that homes in negative equity have increased by 21%, which sounds really bad, but it's 21% of a very, very low number. So still, we only have about 1.2 million homes nationwide that are underwater, which is really only 1.3% of total owned homes. So there still are not a lot of homes that are in like threat of foreclosure or short sales. So we are seeing some of those increase a little, but we are not seeing them increase a lot. So if you're sitting around waiting for like this huge increase in foreclosures, we just don't see it happening. Certainly not around here. Some other data that came out about student loans.
Yeah, I thought this was really interesting. So apparently about 9 million student loan borrowers missed one or more payments this last year, which is about 20% of total borrowers. And for those of you wondering, what does that really mean? Well, what they saw is on average, their credit score dropped by about 100 points.
That's crazy.
That's insane. That is a lot. Yeah, and according to the obviously same source here, 10% have also seen their scores fall beneath 620 because of, this big drop in just one simple missed payment.
And that is not helping our first-time home buyers
Absolutely
break into
not.
this housing market.
No.
Already we have the average age of the first-time home buyer at 40 years old, and that does not appear to be getting any better in the coming years. So we're hoping in 2026 that we're going to have a little bit more inventory. We'll have a little bit lower rates, but we are not going to see a huge change in any of this. But hopefully, as time continues to go, we will see more and more people just having to move, making that decision to move. And slowly but surely, this housing market is going to free up, and we will start to see some other things change. Oh, and of course, as we were talking about last week, if you have a home to sell in order to buy, that is going to become more easier.
Oh, yeah.
So that will free up some inventory as well, as we see people able to write those home sale contingency offers and actually have them get accepted.
Absolutely.
So that's our Monday market update for today. We will see you one more time before Christmas. We'll be back next Monday, and then we will be off for 2 weeks for the holidays, and we will see you in 2026. Have a great rest of your day.